Well, it is 12:30, so we're going to go ahead and get started with our final webinar in our crop insurance series. This webinar session will cover sorghum silage insurance options. Again, this is a third part of our series. We also have covered double crop insurance, production, other topics. All of these sessions have been recorded and will be available at our YouTube channel, youtube.com/sorghumgrowers, if you'd like to go back and reference the previous two sessions. But today we'll get started with Chris Cogburn, who is Manager of Sustainable Crop Insurance Services. Chris draws from a background both as a farmer and a former National Sorghum Producers board member, where he has been with the organization since 2005. Today, he serves as the Senior Policy Advisor, as well as the Manager of Sustainable Crop Insurance Services, a subsidiary of NSP. And before we get started, I wanted to point your attention to the location to ask questions, and feel free to do that along the presentation, and we'll have an opportunity to answer those toward the end. But if you look on your screen where the triangle, square, and circle are, that location to ask a question is available there. There's another way to do that, and I will turn that on. It'll be a link at the top of your screen, but feel free to ask questions, and again, we'll get to those at the end of the presentation. So with that, I'm going to turn it over to Chris to begin talking about our topic today.
Thank you, Jennifer. And there we go. Get caught up on the slides. Come on, next one. There we go. It's a little jumpier today than it was last week when we're trying to move the slides around. Okay. So glad everyone joined, and really kind of talk about just on the forage side, what you could look at doing, covering sorghum forages. And first one we'll look at is the actual silage sorghum policy. If you look at the map there, you can see what counties it's available in New Mexico, Texas, Oklahoma, Colorado, Kansas, and just in that one area. And this was introduced first in 2005. NSP helped gather the data to kind of put this together, and then RMA rolled it out. It strictly covered silage types. So your more traditional sorghum silage varieties. It does not cover dual purpose sorghums, and it doesn't cover Sudan crosses. So hay grazers, it won't cover those. It's going to be strictly limited to your silage type hybrids that you'll see being chopped in the high plains. If you're wanting to look at doing something on that, your sales closing is the 15th of March, so it's the same timeline as your other spring policies. And if you're looking at that map, Texas, New Mexico, and Oklahoma only have irrigated offers, so you can't insure non-irrigated sorghum silage in those areas. Colorado and Kansas, they've got both irrigated and non-irrigated offers in all the counties that are shaded. That's probably the biggest difference between the northern offers and then the southern offers, is just where they're going to allow the non-irrigated. The big change that came in, we need a slide to go. There we go. The big thing that came in 24 and 25 was the change on the irrigated side. So in 24, RMA rolled this out in Texas, Oklahoma, New Mexico. In 25, that's going to be rolled out now in Kansas and Colorado. And what that's going to do is they're going to remove any of the historical production requirements for growing irrigated. Before, you had to have grown silage 2 out of the last 4 years. That could have included corn silage, but it had to have been some kind of silage you've grown to insure. Now they've taken that out. So think about this now, just like your regular sorghum policy or corn policy. If you're a brand new producer, you're going to get 100% of the tea yield, and you're ready to go. No acreage caps or anything like that. Now you get up in Colorado and Kansas, we still have the existing acreage. And it's really not acreage cap; it's more a guarantee cap that they've got in place on the non-irrigated, where you basically can't have 125% more acres than you had before. They start prorating that coverage back on the acres you're going to have for the current year. Again, that's still in place on the non-irrigated side. Irrigated side, no acreage caps and no historical requirement for getting it insured. It's going to be full 100% tea yield. The other thing interesting about the solid sorghum policy, you're going to see 2 tea yields in the actuarial documents. You'll have a brown midrib and a non-brown midrib. This is just to account for the differences in the production capabilities between your brown midrib hybrids versus your non-brown midrib hybrids. Your midrib, brown midrib is supposed to have a little better quality, somewhat a little lower yield, but they're making up that really good. So you don't see that usually anymore, where you see much of a yield drag by going to the brown midrib, but you get more quality. Again, depending on your location, what hybrid you're comfortable with. Again, you're just going to have 2 different tea yields to work with, brown midrib and a non-brown midrib. So that's kind of the down and dirty on the silage sorghum policy. We're going to spend the rest of the presentation going over annual forage. And now, kind of odd talking about annual forage now, because even if it's appropriate for you to do something with it, you couldn't, because sales closing was back on July the 15th. AF is one of those mid-year crops that even if you're going to be using it for your sorghum silage, you're going to have signed up, the previous July. But we discussed about this when we were putting the webinar together, that really, there's really not the best time to talk about it. So we're going to lay it out now. And if this is something that may interest you, if you think some of your silage can be covered under this, but it's a better fit than the sorghum silage policy, then like I said, not going to help you for 25, but talk with an agent, get signed up by the 15th of July, then you'll be ready to go for 26. But we're going to go over that. AF, it covers annually planted forage crops, not cover crops, but that would include your sorghum silage. And the nice thing about AF, there's no requirements on it being a true silage type or not being a hay grazer. It's going to cover your dual purposes. If you certify it as a forage at FSA, that's what you can use it for, then you can cover it under an AF policy. Plus, AF doesn't discriminate between if it's irrigated and non-irrigated. So if you're down in Texas, Oklahoma, New Mexico, where you've got non-irrigated sorghum silage that, it may be hay, you may chop it depending on the year. Again, that could be covered AF, not a problem at all. AF, and we'll get to this a little later in the slides, the county-based value, RMA doesn't make a difference between irrigated and non-irrigated. Your base value is going to be the same for that crop, depending on the county and the grid, but it's not going to be dependent upon irrigated, non-irrigated. Other thing really interesting about AF is that's why if you're looking about doing this in 26, get signed up here before the 15th of July of 25. you're not required to insure all your eligible acres that you plant in a particular growing season. And we'll talk about growing season. You don't even have to submit an acreage report if you don't have any acres. Completely different than your regular multi-peril crops like sorghum, corn, even the silage sorghum policy. You know, even if you don't plant silage sorghum, if you've got it on your policy, if you have that policy in place, you're going to turn in a 0 acreage report. Not even required to do that for AF. So very flexible and might be a fit if you're looking to doing to cover some silage that you cannot cover under the silage sorghum policy. Growing seasons for AF, pretty simple. It's one for every month, except because it starts in July. Your first growing season is August. And so August is growing season 1, and then the next July is going to be growing season 12. So that's how they number them, and that's how we're going to talk about them rest of the presentation. Your acreage reporting, that's the 5th of the month after the growing season. So if you're in season 1, let's say August, you plant some wheat, you know, right at the end of August, well, that acreage report's going to be due by the 5th of September. Jumping for a silage example, let's say you plant some silage the 15th of June, the acreage report on that would be due July the 5th. It's the 5th of the month after the growing season. And so your first acreage report would start September 5th, and that would be season 1, which is August. Excuse me. Intervals. AF is based on lack of rainfall, determines if there's a loss. And, you know, it's not particularly about a particular day. It's about the 2-month interval. And everything is divided up in these 2-month intervals, and that determines if you have a loss. And, you know, when you're in a growing season, which is a month, every one of those months has different intervals you can choose, and that has to add up to 100%. And you cannot have overlapping intervals. So if you have a Jan Feb, you can't have a Feb March, because February would be in both of them. In that case, you could do Jan Feb, then the next one you'd be able to do would be March April. You can't overlap. And yeah, you can change your interval choices between counties, because that's when you're setting up your AF policy. You know, but if you have multiple grids inside a county, they're all going to have the same intervals. But if you're in a different county, you can change your interval choices. And this slide here kind of lays out all the eligible intervals for every growing season. So for example, let's say on a silage deal that, you know, you plant in June, that's growing season 11. You know, you could have July, August, September, October, November, December, or December, January. Those would be your choices. And you could do 40%, or since you're in those later seasons, you can even go up to 50% of your coverage in a particular interval for that growing season. So let's say you wanted to do 50% July, August, and 50% September, October for a June planted silage. That would work fine. Or you could do 40% July, August, 40% September, October, and 20% November, December. Again, it has to add up to 100% to cover that growing season, but you can spread it out in the interval, either up to 40%, or if you get those later ones like it's showing there under that planting month column, you can go to 50% depending on the state and the month. So again, once you get to May, you can pretty well do 50%, except in Colorado. Colorado, you have to stay at 40% max, no matter the month. Kansas can start doing 50% in May, so May, June, July. Texas, Oklahoma, and New Mexico, they could be at 50% starting in April all the way through July. And then kind of switching gears a little bit from sorghum silage, but if you're looking at, you know, on the earlier months, they have dual use, and that is particularly applied just strictly to wheat. We'll talk about that a little later. That'd be for your August, September, October. Then once you get to November, only dual use will be available in Texas and New Mexico. And if you're familiar with PRF, you know what I'm talking about when I say the grid, but that is a quarter-degree latitude by quarter-degree longitude grid. That's roughly about 12 miles wide by 17 miles long. And those grids, that rainfall determines if you're going to have a loss for that particular interval. The rainfall records that RMA is using is pulled from the Climate Prediction Center. Those rainfall records go back on this grid system to 1948. And depending on where that grid is, you may have a NOAA station or cooperator in that grid. You may not have any in that grid. You may have 2 in that grid. That doesn't matter. They weight it by the closest 4 reporting stations, to the center of that grid. And that's how they determine the rainfall for a day. And then, if a station doesn't report for some reason that day, they're going to go out and grab the next one, but it's going to have less weight if it's further away. So again, if you're familiar with PRF, it's the same grid here that's used for PRF. Exact same grid, exact same rainfall records. We're just using this rainfall from that grid now to use it to cover an annual crop instead of a perennial like a PRF does. Your coverage levels, think about this like in your regular multi-peril. Your coverage levels on AF range from 70% to 90%. Your coverage level does 2 things. First of all, it determines what indemnity would trigger. So if you're at a 90% level, well, if the rainfall for that particular growing season, for that interval, is below 90% of the long-term average, those records going back to 1948, that's going to trigger a loss. And if you did an 85% coverage level, you'd have to be down below 85% of the long-term average to trigger a loss. Just like in multi-peril, the higher levels are going to cost more money because they're going to trigger more often. And there's also a subsidy difference too. But again, very similar in that respect to multi-peril. The higher you are, it's going to cost more money. Again, you can change this from county to county, just kind of like on your multi-peril. You could do 90% in one county, and then if you had stuff in the next county, you could do 85 there if you wanted to. That would be up to you. Your productivity factor, this is tied kind of the coverage level, except your productivity factor, basically think about this as what you use to adjust your premium up or down. And you're doing that because you're adjusting your total coverage up and down. And you can set your productivity factor from as low as 60% all the way up to 150%. And again, strictly, this doesn't determine when it's going to trigger. This is basically just going to determine how much premium you're going to have, and again, then how much protection you're going to have. And to get to our protection amount, this is where all this comes together. And like I said earlier, RMA does these county-based values. These county-based values are put out by RMA in the actuarials. So AF actuarials get released at the end of April. And actually, you've got to sign up by the 15th of July. So the county-based values for 26 will be released April 30th of 25. And if you're trying to figure out what your total coverage is for a particular growing season, then you can take your county-based value times the coverage level times the productivity factor. And example here for Haskell County, Kansas, in this grid 20817, the county-based value for 25 was $315. If you did 90% coverage at 150% protection factor, you take the 315 times 90% times 1.5, you have $405.20 an acre of protection. Now, you can change your coverage level and protection factor by growing season. I mean, literally, the app for AF is you basically is having like 12 mini policies, because you can literally change your coverage level protection factor however you want to between the different growing seasons. So in some cases you want to do that. You want to make it load up a little higher. If you're doing wheat with it under AF, if you're doing dual purpose, you bump that up high, and then maybe you'll do your summer crops, lower them down, do a little lower coverage if you want to. Again, you have that flexibility when you fill out your application and get that policy in place. But again, the county-based value, though, is put up by RMA. And so think about it being like your price selection for an RP crop. When RMA announces those base prices, that's what you have. Again, same way here. RMA announces the county-based value. That's what it's going to be for the year. And there's no adjustment county-based values like you would have with an RP policy. If the price goes up, your insurance could increase. Your insurance isn't going to change for AF. That county-based value is going to be set for the year, and it's not going to vary. Premiums, pretty simple. Every interval and every grid is going to have a certain premium rate depending on your coverage level. Again, that 90% is going to cost more than 70% because it's going to trigger more often. So premiums are determined by that. Subsidy levels, 70 and 75 have the highest subsidy, which is 59%. 80 and 85 at 55, 90s at 51% subsidy. These are the same subsidy rates as you'd have on a PRF policy. So that's why you'll see quite a bit of jump between a 75 and a 90, is because one, you get the underlying risk is higher, so that underlying rate's higher, but you're also getting 8% less subsidy when you're going from a 75 to a 90. Dual use, it talked about this early, really doesn't apply to the silage sorghum, but if you're doing something with wheat, grazing cattle, this would allow you to do that with your wheat. Can't do it with triticale right now. I hope they add that sometime in the future, but right now it's strictly going to be tied to wheat, and that allows you to take 40% coverage on your AF. So if you had a loss on the AF that was dual purpose wheat, you would only pay 40% of that AF premium, but you'd only get 40% of the loss. But then that wheat crop would be fully insurable under your multi-peril at 100%. It wouldn't affect your multi-peril in any way. It just lets you have that dual use coverage to cover the grazing side on the wheat. And again, that's going to be dependent on when you can plant, when that's a coverage. August, September, October, it's available in all states. November is just available in Texas and New Mexico for dual use. It was planted in November for those two states. Multi-cropping, this is where you get talking about two different policy provisions, because your RP is a different policy provision group than your AF. But you can multi-crop with AF. You just have to kind of follow it along. If your AF is the first thing you planted for that year, depending on, that slide we looked at before, all the different growing seasons and the intervals, depending on when you planted, let's say something you planted in September, then, it's going to list the intervals, or the growing seasons later on in the summer where you can actually do a second crop and have it fully insured. And RMA's laid that out. Like I said, that was in that one slide. And again, as long as you're following that, you can plant September, and then if you want to plant something in June, well, then that would be insurable too. So, because that would be, that'd be eligible for double crop under AF. Now, if you plant a multi-peril crop after an AF crop, your MPCI crop would be fully insurable, but you've got to follow a couple things. One, you can't destroy the AF until the first day of the last interval. So let's say your last interval ended in March. Your last interval was March, April. Well, you get past the 1st of March, you can destroy that AF crop, go back to the multi-peril crop, and the multi-peril crop would be completely insurable. What you've got to watch in multi-peril in that case, especially on irrigated is not a problem. Non-irrigated, depending on what state you're in, you know, you've got a specific date you can't hay or graze past, which would be like Texas, Oklahoma, New Mexico. You jump up to Colorado and Kansas, you know, your non-insured special provisions for like sorghum, cotton, you know, they give you saying that, you know, that crop can't head. So you have to watch those. If you're going to be doing multi-cropping with a multi-peril behind the AF crop, just watch those. Can sure be done, but just make sure, visit with your agent, and you know the dates so you get everything done right. Now, if multi-peril is the first crop planted for the crop year, it pretty well falls under the old first crop, second crop rules. Just like you had a failed wheat crop, I'm going to go back to sorghum. Same rules there, except now your second crop, instead of being like grain sorghum, let's say it's going to be an AF hay grazer crop. You know, you could take 35% of that multi-peril crop, fully insure the AF crop, take 100% of the multi-peril crop, your AF acres would, in any case, would just be uninsured, so you just don't turn them in on acreage report. There's no reason to turn them in and call them uninsured. You just don't report them because they wouldn't be insurable if you kept all the first multi-peril. Now, if you plant in June or July, that's going to qualify for full insurance on the AF because RMA would consider that a standard double crop practice. So this is a case where if you fail wheat and then you don't plant that AF crop till June or July, you can keep your 100% on your wheat crop, also get full AF insurance on that stuff planted in June or July. Again, this kind of a special case there where they consider that a double cropping situation that is standard. Again, has to be planted, that AF crop has to be planted in June or July, be able to fall into that category and still keep 100% of your AF, which would be probably, or 100% of your multiplier, which would be your failed wheat. Again, sure can be done. We've done quite a bit of this in our particular book with some people, depending on years. Every year is different, but AF does give you a lot of flexibility, and that's the one nice thing about it. That's kind of the end of the AF, and then, like I said, if you got any questions about AF or about the silage sorghum changes, be happy to look at those.
Well, thank you, Chris. Going to give it a few seconds here and see if we have any questions that come in. Of course, can always follow up with Chris after the webinar individually. But if you'd like to ask a question, again, that triangle, square, circle in the bottom right of your screen, or you can utilize the link that is at the top of the slide presentation. I did put a link in the chat for our post-event survey, if you have a moment to fill that out as well. But you can also scan the QR code here on this last slide and access that as well. In addition, Chris's email is available here if you'd like to reach out to him after the webinar and ask him questions individually. But we will have this recorded session available on our YouTube channel if you'd like to refer back to that and share it after it's over. Chris, I'm not seeing any questions come in right now, so I'll just give it a few seconds here, but appreciate your time and expertise talking about silage insurance and annual forage.
Oh, very good.
All right. Well, thank you for joining us. And if you've been a part of all three of our sessions here, appreciate you following along for our crop insurance webinar series, and look forward to feedback on that. Thank you again for joining.